Thanks for tuning into India Market Close, and it's been a quiet day of trade if you look at the benchmark indices. But within that, if you look at PSUs, look at defense, you look at metals, it tells you a completely different story. But the indices are lying flat, the Nifty at least. But in the green, it was not in the green when we started off. The mid caps and small caps should come up on your screen, and then we'll try and pull up so Nifty mid cap about 1/3%, small cap index will come up, and then Nifty metals should come up on your screen. Small caps are a bit quiet today for sure. Nifty metals though is anything but quiet. Some strong moves there, 4% higher on that index today. Some strong buying interest visible in almost all of these names. You look at a Vedanta, you look at a Hindalco, you look at ferrous steel companies as well. Some really strong show that is happening out there. Look at that. Hinzinc is a different kettle of fish altogether. But Vedanta up 7%, Hindalco up 5%, ferrous companies, Tata Steel, JSW Steel up. This isn't a steel company per se, but it's still up about 2.1%. I mean, a couple of losers maybe, but otherwise, metals are doing just a remarkable day. Harsh will talk more about this. We'll talk about in these stocks in detail as well. But just very quickly, the Nifty heat map before I hand it over to Harsh for what's happening across the broader end of the spectrum. And even there, the Nifty metal gainers. Look at the top four. Some really strong moves for Hindalco, Coal India, Tata Steel and JSW. Adani Port is packing a punch, a serious punch, about 3% higher in trade today for that one, giving it companies, Adani Enterprises up 2% as well. And equal number of losers and gainers. The only point is Nestle stayed subdued for a better part of the day. Autos have stayed subdued for a better part of the day. But if you were invested in metals, Harsh, I don't think you would complain.
Absolutely, Niraj. And, you did cover metals, but I also want to cover the PSU pack because that pack also is doing very, very well. So let's pull up the PSU stocks. The Nifty PSU is up 2% and the PSU bank also doing very, very well. But that's specifically on the PSU pack. Look at a Coal India, NHPC, look at those moves. BEL up 6% odd, BHEL up 3.5% odd, LIC. LIC has been on a tear of late. We've seen LIC make some very, very strong moves over the last 5 odd trading sessions. Again, doing very, very well for itself. GAIL and Concor slightly somber, but outside of that, you're seeing good moves on the PSU. Of course, Niraj covered a large part of metals. But let's move on to the broader markets, see what's happening there. The Nifty mid-cap and small-cap indices, we can quickly pull those up. Before I move to specific stocks, 1/3% lower on the Nifty small cap. It's come off those days lows, so that's a positive. The Nifty mid cap trading in the green, 1/3% higher. But specific movers, especially on results, but even outside of that, there are several movers on the back of news as well. Let me first off pull up or focus in on the results. IFGL Refractories, probably within the mid cap, small cap space. One of the names is absolutely beaten, 13% down. Axis Cades also down roughly 11.5% odd. Trident, you can see on your screen, also trading lower on the back of a poor set of numbers, especially on the profitability front. Let's pull up a Carousels. While numbers were quite good, but sequentially the numbers look somber. 5.5% lower on that one. City Union Bank down 5%. Again, no growth coming in from there. Just about 6% odd single digit growth in an otherwise in a market where Compete is growing at least double digit, and Rainbow Children also down 5% odd. Endurance Tech is the other one, down roughly 4% odd as well. Those are the ones which are trading lower in at least trade today. Let me pull up those which are doing very, very well. Rolex Rings up nearly 15%, SJS Enterprises up nearly 9%, and BEL doing very well for itself. We spoke about BEL even on when we were speaking on screen. IRFC also doing very well, very strong profitability despite NII growth not being there. That's a clear positive where operations is concerned. Operationally very strong numbers. SAIL also doing decently well for itself in trade today. Nesco again, decent set of numbers, 2.3% higher. Then's the big one, Oil India, also doing well for itself, 2+% higher on the back of numbers. RVNL and Kalpataru, new order win plus the numbers. RVNL doing exceptionally well for itself. Kalpataru also up roughly 5 to 6% odd in trade. RVNL up 13%, well, Kalpataru's up 4%. That's where we are at least. And I quickly want to also mark out Balkrishna Industries. That one also in focus. So all of these counters, of course, in focus, Niraj, and we'll break it down for you all. At least we'll try to cover as many as we can on India market close.
And let's start with RVNL maybe, because Harsh kind of spoke about those as amongst the last few. But it's pertinent to point RVNL simply because of the kind of move that the stock has made today. 13% higher. You could argue in some sense the NDTV profit impact, because the management remains very bullish about the company's margin play going forward. Listen in.
The margins earlier were fixed, that we used to have the only nomination projects. Now we'll have the nomination plus the bidding plus the projects through MOUs. This 23-24 we have signed 3 MOUs costing around 4,000 crores, 3,500 plus. So we have got a complete basket. Then we will keep on getting the basically dividends from the SPVs. All 5 SPVs have been commissioned. Now it is time to give the results from those SPVs. So what I can tell you is that we have already diversified from local rail infra to global oil infra. The margins will certainly change because we will have the mix of the various kinds of segments. We are entering into the solar, we are entering into the irrigation, we are entering into the road sector, and the plenty of scope is there.
Well, quickly want to mark out Arvind Fashion there, up 4+% in trade. Very strong growth in terms of profitability, as well as 39% profit growth for Q4. Clearly looks extremely strong. Even revenue not much, just about a 4% growth. So largely seems like an EBITDA driven story, at least right off the bat. Numbers still trickling through on that one, but again, this one looks to be quite good.
Yeah, I was just trying to see if we can pull up, Harsh, the numbers from the exchanges to try and see if it's indeed an EBITDA or a one-off that might have led to these numbers as well. Because clearly you can see that uptick that has come into the bottom line front, not quite mirrored by the top line. So just opening that sheet to just tell our viewers what the numbers could be like. The standalone numbers, of course, are different, but if we refer to the console numbers, then the PAT number at least looks rock solid, and which is why that 5% uptick for Arvind Fashion
It's come off a bit actually, Niraj, but nonetheless holding up above the 4% mark for sure. So that's where we are at, and while we'll open that and we'll give you all a better deep dive of that. Stock of the day, clearly RVNL. Let's pull that one up again. You continue to see order pipeline remain quite strong, and maybe a margin shift there could lead to some efficiencies really starting to play out. 12.5% high, 12.5% up, and clocking its life high today. So positive clearly with regard to where the commentary on RVNL is concerned.
But some updates here. So the EBITDA number doesn't seem to be as strong as the PAT number, but better than the revenue growth number. Circa, well, the PBT example is probably up about 25% not the 40%. And I think on the corresponding quarter last year for Arvind Fashions, there were some exceptional items on the tax side, which could also have had the bit of an impact on the negative side for them. There was a deferred tax charge in the previous quarter last time, which probably also is hurting that stock relatively. But on the whole, decent numbers, 39.67 versus 28.52. But QOQ, Harsh, by the way, the numbers have come off quite dramatically, because they've clocked in 39.67 versus a 65 crore number. So I think that might be something that the street may not like as well. So that's the other key point to monitor.
Sure. Niraj, also on margins, 20% growth on EBITDA. Therefore, margins have gotten better. From that 10.5 odd mark, it's gone to 12.5. Clearly, that's probably what is also aiding or keeping the street enthused about this one, because clearly the margins have gotten better on a year-on-year basis as well. So outside of tax, you're seeing a decent
just that the improvement in margin doesn't seem to be as strong as the bottom line number suggests. So I think that therein probably lies a bit of a problem for this one, but otherwise seems to be okay.
Yeah. And maybe it was a seasonally strong quarter as well, which is Q3, always seasonally strong for companies like Arvind Fashion. And therefore, I may give it a bit of a discount where profitability is concerned. But anyway, we're joined in by Kunal Shah, who's the Senior Technical and Derivative Analyst at LKP Securities. Welcome on board, Kunal. Kunal, texture of the market as well as the Nifty Bank, your views on the benchmark and the Nifty Bank?
Yeah, I think the volatility is going to be there ahead of the elections. We have seen a good rally from the lower levels for the Nifty index. If you look at India VIX today, it is almost trading at 21.7 levels. So even it has surpassed the recent high what it had made, which clearly indicates that this volatility will continue in the markets. Now, if I talk about Nifty, the good part about Nifty is that we are trading above the level of 22,500, which was the immediate resistance zone for the market. Even if you look at the open interest data for the weekly expiry as well, 22,500 is the strike price where the highest open interest is also built up. So clearly the base is getting stronger and stronger day by day. We should hit the levels of 22,700, 800 on the upside. So for me, the Nifty view remains bullish as long as it sustains about 22,450 on a closing basis. If I talk about Bank Nifty, this is at a very interesting juncture where the 20-day moving average of the Bank Nifty is placed at 48,300. We are just touching those levels on the futures front, but we are unable to sustain above it. So once we see a breakout above 48,300 decisively, Bank Nifty will see a good short covering move towards 48,600 and even 49,000 levels on the upside. So for me, if you look at Bank Nifty, 48,000 now continues to be a strong support. Again, with I compare with the open interest data, 48,000 put is the strike price where again the highest open interest is also built up. So clearly put writers are active on the lower ends. So for both Nifty and Bank Nifty, the view remains bullish. Just a breakout above 48,300 for the Bank Nifty, which was an underperformer, will start to outperform the Nifty index. And that is where it will also push Nifty toward 20,700 mark on the upside.
Okay, what about stock ideas, Kunal, for the afternoon?
See, I think PSUs is something what the focus is on, and I think that is where the real momentum is. So my pick would be NBCC, that is from the cash market. The stock has already given a symmetrical triangle breakout on the technical charts. 149, 150 is where the stock is currently trading. One can initiate long positions at the current levels, keeping a stop loss of 140 on the downside and looking for targets of 170 on the upside. So PSUs is something where the momentum is, and NBCC would be my top pick in that space.
Okay, so it's you like nothing from metals, Kunal, before we take that break? Metals is the other pocket that is looking so strong today.
Absolutely. Niraj, I think metal is in a bull cycle, and I think this is going to continue for the next 3 to 4 months as well. We are extremely bullish on the entire space as well, and the entire metal index is likely to go even from the current levels up by at least 5 to 8% on the upside in the very near term. So if I talk about index, if moving 5 to 8%, stocks I can see at least a rally even for 10 to 15% from the current levels as well. So for me, the pick over here will be Tata Steel, fresh breakout, what we have got in the stock in today's trading session after a long consolidation, which was lasted for the last 2 weeks. And this breakout has been backed by volumes as well. So clearly a good momentum, what you are getting 174, 175 where it is currently trading, keeping a stop loss of 169 on the downside. Looking for first target on the upside will be 183 and second will be 192.
Well, it is a ferrous name and not a non-ferrous name, because non-ferrous are the ones which are actually really revving up. I mean, just look at what a Vedanta and a Hindalco have done. Add to that a Hinzinc maybe. Just some really strong moves there for both of these, but nothing to take away the fact that the steel companies are doing really well as well. But yep, so that's the long and short. We'll talk about metals in great detail with a fundamental guest as well. But the biggest voice of the afternoon or of the week has to be Prime Minister Modi in an exclusive conversation with NDTV Network's editor-in-chief Sanjay Pugalia. Prime Minister Modi had some very interesting thoughts to express when one of things that he says is that the stock market will break records on the 4th of June. Listen in.
ऐसा है कि हमारी सरकार ने मैक्सिमम इकोनॉमिक रिफॉर्म्स किए हैं और प्रो एंटरप्रेन्योरशिप पॉलिसीज हमारी इकोनॉमी को बहुत बड़ा बल देती है, स्वाभाविक है, हर कोई आएगा। हम 25,000 से यात्रा शुरू की थी, 75,000 पहुंचे हैं। ये अपने आप में दुनिया में हमारी इज्जत का प्रतिष्ठा भी बढ़ती है। दूसरा, जितने ज्यादा सामान्य नागरिक इस फील्ड में आते हैं, इतनी इकोनॉमी को बहुत बड़ा बल मिलता है जी, बहुत बड़ा मिलता है। और मैं तो चाहता हूँ हर नागरिक के मन में थोड़ी रिस्क टेकिंग कैपेसिटी बढ़नी चाहिए।
एब्सोल्युटली,
ये बहुत जरूरी होता है। सोच सोच करके क्या करूँगा, ऐसी जिंदगी जीने से बात बनती नहीं है। और 4 जून जैसा आपने कहा, जिस दिन चुनाव का नतीजा आएगा, आप उस हफ्ते भर में देखना कि यानी भारत का स्टॉक मार्केट के लिए उसके सारे जो उनके प्रोग्रामिंग के जो प्रोग्रामिंग वाले सारे उनके थक जाएंगे।
जी बिल्कुल।
अब आप देखिए पीएसयू की कंपनियों का शेयर कहाँ पहुंचा है आज।
बिल्कुल
ना, पीएसयू के शेयर तो गिरना उसका उसका मतलब ही होता था गिरना।
हाँ, ये मेरा ख्याल हुआ है कि पीएसयू तो बंद करने की तरफ आप जाएंगे, लेकिन अब तो पीएसयू
नहीं, स्टॉक मार्केट में उसका वैल्यू बढ़ रहा है जी।
बिल्कुल,
अनेक गुना बढ़ रहा है जी।
बिल्कुल,
नेटवर्क में बर्थ उनकी जो है वो भी बढ़ी है जी। तो मैं अब HL देख लीजिए, जिसको ये लोग जाकर के जुलूस निकाले थे, मजदूरों को एक करके भड़काने की कोशिश, आज HL इस गति से चौथी तिमाही में उसने रिकॉर्ड प्रॉफिट किया है जी। HL 4000 करोड़ का प्रॉफिट।
We'll switch focus to Nifty Metal because that one is literally on fire. You're seeing, we've spoken about these, but Vedanta and Hindustan Zinc are the ones leading the pack. Of course, in terms of value, the kind of run-up that we've seen in Vedanta over the last year or so, if you can pull up that chart, over the last year, we've seen an absolute stellar run-up in Vedanta from maybe the lows of 210 odd. That stock has been on a tear. 490 is now where we are at where Vedanta is concerned. And this excludes all the dividends it has actually given. And it gives a ton of those as well. So So that one's obviously in focus. It also owns roughly 65% of Hindustan Zinc. And let's pull that one up because Hindustan Zinc is also up nearly 20% in trade today. And outside of that as well, the entire metals pack abuzz.
Aside of everything else, and Gurmeet will be best placed to talk about this, but it just seems to be a bit of a no-brainer that the China recovery is now being taken note of. And if indeed there's a lot of chatter on global news outlets about China getting almost ready to give a boost to the property sector. And if that were to happen, then I think the phrase as they use, ke stocks fat jayenge, might actually turn out to be true as well. Let's ask the Delhi boy about this. Gurmeet Chadda Johnson, he's managing partner and CIO of Complete Circle, not technically a boy anymore, manages a formidably large fund as well. Gurmeet, great having you. Thanks so much for taking the time out. Great. It's been a while, so good talking to you. Gurmeet, can we start off with this metals thing? We'll go to the markets at large because I presume you would have had a chance to hear PM Modi talk to our network and talk about all the capital market stuff as well. But before that, let's talk about metals. What's happening here?
So, Niraj, I think it's obviously today's reaction is more to do with China, pledging to buy about unsold housing inventory, almost $1 trillion yuan kind of stimulus. And as you just mentioned that, the world probably believes that, metals are directly linked to China. Copper in particular touched about $11,000 on the LME. Copper also has applications in cables, wires, since it's linked to housing. So probably there's a double action there. It would be interesting to see some of the cable and wire names also in India. How do we react to? I think Polycab made a new high today and touched about 1 lakh crore market cap. But these moves in metals are always sharp both ways, and you should always be tactically positioned on this rather than have a long only view. And I think in the current scene, probably the non-ferrous names makes more sense. Maybe Hindalco with listing on Novelis could also give you some bit of maybe SOTP and value unlocking. Although it has again run up. We saw oil run up with there was flooding in African wines and manganese prices shot up, and then we saw oil running up because again it's again very very event driven, as I said. So you got to go commodity wise. I'm looking at non-ferrous names. In ferrous we have a bit of a special situation, kind of a play called Mukand, where it's more a change of ownership now with Bajaj owning 74% in the company versus the JV earlier, and they're infusing more and more money. We entered the stock in single digit, now it's obviously doing a little better, and probably they're likely to infuse more capital, send more land parcels in Thane, and that could see a bit of more re-rating on the stock. So we are playing it very selectively, as I said, more either as a special situation or tactical.
Sure, Gurmeet. So Gurmeet, just in terms of overall value, do you feel a lot of the value re-rating has already happened? Because that's the impression I'm getting, where you're going selective, you're going for special situations, means that there's probably lesser value left on the table, and hence therefore does it warrant an 18% move in something like a Hindustan Zinc and 6%, 5% kind of a move in Vedanta and the like, or do you still feel that there's some value in other pockets as well?
I think the moves have become sharper. I've seen, the likes of Kotak Bank move 10% in a day. So I don't see, I'm not surprised with these, 10, 15, 20% moves anymore. The larger ones also move these days. But I agree with you. You have to search for more values now because, when you trade at 21 times, interest rates are still very high. Earning growth is more modest, about, let's say, between 13 to 15%. Then you got to be a little more selective. It doesn't mean that there is no value in the market. But as you rightly said, and special situation for us is more the satellite part of the portfolio. It may emerge both in a bull and a bear phase. Right now, obviously, we are in a bull phase. But there is value in large caps also. So look at, for example, ITC, decent correction. We have the hotel demerger now. I think it's 6th of June is where they've called the board meeting. HDFC Bank also trades at about 13, 14 times. We saw a decent correction in Tata Motors as well. A lot of hotel stocks have corrected, likes of Indian hotels have corrected 10-15%. So you got to be a little more watchful, keep your eyes open. But I agree with you, you got to be more selective. More importantly, you should temper down a bit of return expectations. It's not going to be like what last year was.
Okay. Gurmeet, what happens to end user industries? And then we'll want to take Kunal's view as well out there. But, particularly autos, for example, 5 years, autos, for example, or even gadget companies have enjoyed this margin uptick because commodities have largely stayed quiet, right? Especially the last couple of years. Now, if that were to reverse, could it spell a bit of a upside cap for sectors like auto?
100%, Niraj. There will be some impact because if you see over last 2 quarters, it's more realization growth than volume growth alone, barring maybe M&M, which reported decent volume growth, and that's why you saw the run up, on the stock. In fact, Tata Motors spoke about, they gave a slightly subdued guidance than what the street was expecting for JLR, and we saw a negative reaction. So obviously, it will play out. Any impact would play out, and if you see the sales growth of Nifty versus profit growth, the last 2 quarters have largely been because of the benign commodity prices. So there will be some impact there as well. So you got to be, as I said, more selective. And mind you, for example, in two-wheelers, we probably this year will cross 2019 volumes. So the volumes haven't really come back. It's just that the rural economy is showing some signs. There again, the premiumization is playing. You now have probably 60-70% 125cc bikes. In SUV, in passenger car segment, you have almost 70% SUVs for every 10 cars sold. So it's more realization and not as much as volume. So, you got to be selective. There's no harm in also taking some money off the table selectively in autos. But as I said, there are more opportunities in the value chain of EV as well. So you got to play it mixed, but I agree with you. Auto, in my view, looks slightly expensive at this junction.
Kunal, come in. I mean, auto stocks have had a good run, but as Gurmeet, actually the way Gurmeet said, that if you've seen Kotak Bank react the way it has one day in a year, you know that you've seen it all. But autos in particular, Kunal, they've had a bit of a slipshod, right, save for a few like Bharat Forge, etc., which have had a really good move this time around in this earnings season, or an M&M. What do you do with some of the auto stocks? Are they looking skittish?
Yes, Niraj, if I talk about the on a chart perspective for the Nifty auto, I think the uptrend is still intact on a technical chart. I see some overbought territory which the auto sector is entering into. So even if I look at the momentum indicator RSI, it is trading above 80, but it has still room to go towards 85, 86. So as of on the technical chart, it doesn't look anything very much negative. 23,000 is a level on the auto index which I'll be watchful for. If it breaks that level, then probably the selling will start coming in for the auto space, where it can even head toward 22,400 on the downside as an index. But till the time these levels are not reached, I'll be constructively bullish on the sector, specifically like names of M&M, which is still looking very strong on the technical charts as well, and the two-wheeler space, like of Bajaj Auto, Hero Moto. These are the names which are looking very good on the technical charts as well. But yes, if we talk about the four-wheelers, yes, there is only specific like M&M, what I mentioned, is something which is looking good. So you have to be stock specific in four-wheeler space, but two-wheeler space is something which is looking very attractive on the charts.
Okay, thanks for that, Kunal. Gurmeet, clearly you indirectly kind of hinted on Kotak, but so I won't come to banks first. I'll stick with the more the segment which has been really in the zing, which is PSUs. PSU stocks also very similar kind of trajectory. They've done very, very well, just like metals have. What's your view on that entire space pocket?
So, PSU, you first look at, let's say, for example, PSU banks. I think, again, there, if you see, I've not seen an ROA of 1% for most PSU banks for almost 2 quarters in a row. But when you go level 2, you'll figure out that a lot of this is also because of recoveries and treasury gains, right? And so you have to be careful here, barring maybe SBI, where I think the trend looks more structural, and maybe selectively in Bank of Baroda as well. In fact, there's now news of Stripes being one of the majors in US in touch with SBI for the payment business, picking up a stake in the payment business. I think SBI is generally been a turnaround story. You see the NII growth, see the the app, see the way their even subsidiaries have turned around. And SBI MF is the largest player. The insurance part is doing pretty okay. So most subsidiaries also doing pretty well. So I think SBI is still at about 1.2, 1.3 book. Makes sense. I think probably could see a little bit of more re-rating. And the leadership is clearly shifted more to ICICI and Axis in private banks. In other PSUs, as I said, there's very little headroom. It's very difficult to pay 40, 50 times to defense PSUs, for example. And a lot of these orders are lumpy and long gestation. If you are even supplying, let's say, fighter jets, it is a long project, and you may not have quarter-on-quarter bump in revenues. So I think in that space, while I'm very gung-ho on the long-term prospects of defense, but in that space, I'll be more a buyer on dips rather than buying, maybe an HAL or a BL. They're great businesses, but these prices, how much upside, I think is where we have to question ourselves. So got to be more selective there. Some of the railway stocks, I believe, selectively are still okay. So again, as I said, be more selective. Also, a lot of Me Too PSUs have gone up. So because of SBI has gone up, you've seen certain tier 2 PSU banks have gone up. Because of, some capital goods going up, you've seen the likes of Hudco, even Engineers India going up. So I think that's where I think you have to be a little careful. Just because someone has gone up and the other should follow suit, you should be careful. Another space is power finance companies. These are infra lenders. Their asset classification and norms are very different than the normal NBFCs. You can't be again giving them 3 times, 4 times book. Whenever you have given them that kind of valuations in the past, the near-term returns have been slightly subdued.
Okay, word of caution coming in there from Gurmeet. Kunal, if I can come to you with regard to PSUs. Before we actually switch back and talk about the very interesting defense plus railway kind of play, Kunal, your take on the overall PSU pack?
Yeah, I think PSU banks is something which one should be, I think, much more constructive on. I don't think the entire space will perform, but now the outperformance will come in selective banks. So constructively, we are bullish on SBI, and I think this is where it is heading toward that 4-figure mark on the higher end. So 828 is currently where it is trading. I expect SBI to eventually move to the marks of 950,000 levels on the upside. So SBI is a buy. Definitely on the chart perspective, strong uptrend, high low formations are intact, and the momentum is going to continue. If I talk about the smaller banks on the PSU space, that is where Maharashtra Bank looks very interesting to me on the technical chart. Again, it has been trading at a very good support zone, a rising trend line support on technicals, and I expect this momentum to continue and the stock to make again a new high in the recent days as well. So 73, 74 is what I'm expecting the stock to achieve in the short term. 67 is where it is currently trading. Overall, I feel this could be also at least going towards the levels of 90, 92 on the upside. So Maharashtra Bank and SBI will be the top 2 picks on the PSU space.
Okay, all right. We've been told it's time to slip into a very short break. We'll slip into that break. More on the other side. We'll talk specifics, especially on defense, where we've seen a very solid rally. Something like BEL is shot up 6+% in trade today. And we'll also talk a bit about railways, so stay tuned.
Back with India market close right here on NDTV Profit, with the note that there is a bit of a Metallica out there by a PSU band, and that sums up what's happening in the market, but not necessarily what's happening in the FNO space, because I think it'll be interesting to hear from Agam how has he observed the action during the course of the day today. Agam, good afternoon.
Good afternoon. Well, the Nifty is certainly playing some Metallica riffs there, because it is largely and essentially, well, the metals which are leading the gains on the index. And in fact, that's up by as much as, 0.2% for the underlying. Now, the important thing is that we've crossed over back above the mark of 22,500, and the consolidation of the Nifty continues. With all the volatility that we've seen in the past few weeks, it does seem like at the moment that investors are looking to keep the Nifty at around 22,500, and there's about, at least in the moment, we're seeing about an increase in open interest as well, about 2% added there. Bank Nifty, let's bring that out as well, and again a little bit of a decline coming in. So that underperformance, that relative underperformance of the Bank Nifty with respect to the Nifty has continued. We are seeing some amount of unwinding there as well. The real question is that will this divergence will continue, or can we in fact expect the Bank Nifty to play a little bit of a catch-up trade, which has been, well, there's a lot of traders are expecting, but it hasn't come to fruition just yet. And a lot of that is on account of the relative weakness in the private sector space. But, when it comes to, well, your overall open interest, of course, today we hung around the 22,500 mark, and that's exactly where we see most amount of activity. But more puts being written as against call, and perhaps on expected lines since we moved back above that mark. Moving on in terms of your overall open interest change, again, 23,000 stands as the one with max OI, but 22,500 is where we are seeing the most amount of writing in terms of both calls and puts written. Now let's talk about stocks, and that's where we've seen once again a little bit more traction with respect to earnings coming through. Astral, of course, under pressure, as is the case for City Union Bank, and we've spoken to both the managements on NDTV Profit here. MCX also looking at shorts. Coal India, on the other hand, along with Havells, of course, up and about. Coal India, one of the key contributors to the Nifty as well on the upside, and SBI sees short covering, but say for that, not too much to speak for. Otherwise, all in all, a reasonably stable start to the trading week. The only question is, while the volatility index continues to rise, can we hold on to 22,500 on the Nifty?
It's a key question. Thanks for that, Agam. Kunal, any thoughts on VIX and how elevated it has been, and could the market still scale higher despite that VIX?
Exactly, Niraj, what I talked on the start of the show. It's the India which is causing a concern here. 21.8 is where it is trading. The recent high what it made it again surpassed it. So clearly there's strength over there. So the volatility is going to be there. Looking comparing this with the open interest data and the futures data, the view seems to be very biased on that perspective, where the uptrend is likely to continue for the market. So I think between the volatility, we might see some knee-jerk reaction on intraday perspective. But I think the overall trend still continues to be bullish, with 20,450, 500 acting as a strong support for the markets. So VIX could continue to rise. The volatility could be there in the markets. But overall, the long-term trend still remains bullish for both the Nifty and the Bank Nifty index.
Okay. Point well taken. Some stocks that have been under pressure today, while we've spoken about markets being very well, look at MCX, for example. That stock is down about 4.5%, so that's one name to monitor. There is also weakness that we've seen today in delivery post the numbers, so that stock has looked wobbly. So that's the other thing on your radar. And PB Fintech is down. Harsh was talking about it at the start of the trading session of the show today. about how the promoter selling off some stake or the key managerial person selling some stake, 1% odd, has led to this kind of a reaction as well. Gurmeet, these tech-related names, Zomato notwithstanding, and PB Fintech of course had a good move, but today is down. Delivery, not tech-related, but a newer business model that has gotten formed, so on and so forth. Any thoughts on either the results or valuations?
So, Niraj, after a lot of deliberations and analysis, we probably shortlisted two in this new age. If I can call new age, I think Geo is as new age. I think Zomato and PB Fintech, and I think there's our sense is that if you see our screen time, which is mobile and television screens and laptops included, is averaging between 7 to 8 hours now, which is almost 30% of your time. But our spending online is just 5%. Now you compare that with US, the spending also is 30-35%. I'm not saying India's spending will go up from 5 to 30, but I think this number will go up to 10, 12, 15%. So Zomato obviously is I think will be a big beneficiary. I think Blinkit has been something which has been nobody really discounted that, maybe 6 months back. But I think that's really turning corners. 2 quarters ahead, they are a bit positive. The value is going up. Contribution margin is recovered to 3.8%. Food delivery as well, their contribution margin is upwards of 6% now. And I think there's generally more which can happen here. PB Fintech, again, very asset-light model. They now have the ability to drive pricing, come up with co-branded bundled products, and have white labeling with a lot of insurers they do. And it's a marketplace. It gives you a lot of choices. And this you can use the database they have to pivot to more distribution of more financial products, which we're already seeing in through Bank Bazaar, etc. So I think these are the two businesses I think that are good long-term plays now. They probably crashed the threshold of being sustainable. And I think if Zomato are now, there are just 2 players left. I think they've about 10 odd players. Even in the marketplace, I think I don't see any listed peer compared to PB Fintech, especially when it comes to third-party distribution. And banks have gone slow a little bit on MF in particular. So these are the 2 players I like. And I generally think that we are looking at more ideas, which could be online hotel booking, etc., in terms of how the online consumption can be driven. So tomorrow it could be Tata Click or Ajio and more such plays. But the online consumption and time spent on it are I think would be the key drivers going forward.
Sure, Gurmeet, just very short follow-up to this one. PB Fintech has guided for 1,000 crore profitability by FY27. Currently at almost 60,000 crore in market cap. Do you still feel that there is value and juice left in this?
So, these businesses, you can't really evaluate on PE basis. Probably, you have to look at, as I said, more scalability model. You have to think about, can 1,000 crores PAT come a little earlier than FY27? Can this 1,000 crore can become 4,000-5,000 crores over maybe next? Because, when the jump comes in profitability after an inflection point, it's more geometric progression. Now I'll give an example. Look at, for example, not again comparable, things like, let's say, which have done well, are companies which continue to, surprise you. So let's say Polycab, for example, guided 20,000 crore sales for FY26. They already did 18,000 crores this year. Titan actually grew 30% for almost 20 years, right? So when you grow at that pace of 30-40%, the multiple you get on earnings is far more, and that we call this as a terminal value of business. So a lot of these new age businesses, you got to look at in terms of the terminal value. What could it be 10 years, 12 years down the line? And then that's how you want to value them. And that's why you need to have a bouquet of it. You can't just bet everything on one PB Fintech or Zomato. So you should play it like what the VCs do. Have a bouquet of these things, and there will be high failure rates, but the ones which will do well will also have very good reward rates as well.
Okay, I take your point. Thanks so much for that. Another stock on our radar, Balkrishna Industries. It's one of those which we haven't spoken about, at least on this one. Stock surged on the back of March quarter earnings, slew of brokerage notes that have also come through. Let's bring in Puneet for more perspective on this one. Puneet.
Well, generally for tire makers, we see quarter 4 is a really strong quarter, and Balkrishna is no less. Roughly 23% growth in revenue. EBITDA grew 60%, while PAT grew roughly 97%. But what we've done is we've looked at the financial year of 24, how the company performed after, we had high commodity costs last year affecting margins, which led to revenue rise and margin fall. So this year, if you look at financial year 24, we've seen the revenue slightly down by roughly 5 to 6%. This is on, the selling price coming down because of commodity costs have also come down. But when you look at the EBITDA is up 14% for the whole financial year compared to the previous year, while margins are up 463 basis points for FY24, coming in at roughly 24.8%. This is on the back of other players reporting flat margins for the whole financial year, where Balakrishna has delivered very strongly. We look at the net profit is up 33% to come in roughly at 1400 crores. And when we look at volumes, and here is the key, the volumes are down compared to the previous year, but EBITDA margins, as we said, are strong. Now, the volume came in at roughly 292,000 million tons versus 3 lakh, which it crossed last year. Now, we also looked at what the management said in the conference call, and we have divided into 4 key updates. But on the business front, they said that despite Red Sea problems and shipment issues, they have been able to meet demand, and 50% of the increase in cost they've been able to pass it to the distributors in somewhere like Europe. So they have been protected with this rise in prices of shipments. Where they have also said that they had an income tax authority conducted searches in the month of March, and they are awaiting further clarification and notices on that. They haven't received anything yet. And the other thing is the carbon black revenue, which the company has invested heavily in the last 12 to 18 months. It now forms roughly 7% of their total revenue. When you look at the capex and the debt picture, the capex for the whole financial year of 24 is roughly 1120 odd crores. Going forward, they have also paid down some debt, and roughly a net debt picture roughly at 280 crores odd right now. And they've repaid roughly 175 crores in the month of April itself. For F5, for the next financial year, they have guided that the capex will halve from here, coming at roughly 500 to 600 crores. This is on the back of carbon black facility coming on stream. When you look at the EPR provisions, and this is one of the key facts here that have affected all tire companies, essentially it is a provision that the tire companies have to make, where the government has said that if you guys are selling pollutants such as tires, you will have to pay a provision. The impact for Balakrishna was much lower compared to the others, just at 11 crores for the whole 2 fiscal versus roughly 100 crores, which was for the other one, but this is also dependent on sales. They have said that EPR provisions as a percent of sales will be 1%. And finally, just Niraj, if I can squeeze in the brokerage, Nomura has a buy call with 21% upside with target price of roughly 3,200 going forward. Back to you.
Point well noted, but 9% and great synopsis out there. Thanks for that, Puneet. Gurmeet, you like BKT, or are there better tire companies to look at, or would you want to avoid all of them?
No, we like BKT. It's part of a universe. I haven't really invested, but it's part of the universe we track. I think if you see last 2 quarters, they've exhibited volume growth. This quarter was almost 12% quarter-on-quarter volume growth, and with obviously better margins. Also, the things which were against the company suddenly, for example, the disruptions because of Red Sea. They had invested in carbon black, which the industry thought is wrong capital asset allocation. We saw a bit of a negative reaction. And then, the freight costs, etc. So all of this is probably coming back. And more importantly, they've invested in India for the last 4 or 5 years in terms of building SKUs, distribution reach, more products, more branding. And I think that is now will pay off. So much more balanced portfolio versus just a pure, Europe and other export play. And I think that is what Street would recognize. It's always been richly valued. It's never been a cheap stock. And there was some concern, when inventory levels went up, the net working capital went up. I think those also seems to be getting addressed. So nice bit of operating financial leverage playing out with reduced freight cost and reduced inventory levels. But at this price, again, as I said, valuation slightly richer for our company.
Okay, Gurmeet, I'll stick with you with regard to some of these defense counters. You see a Cochin shipyard up 11%, Hudco, okay, up roughly 10.5% but GRSC again up 7.5%. You're looking also at BEL, which is up 6.5% as well, 6.5%. What do you make of this defense rally? And I know you mentioned you're cautious. Are you cautious with regard to valuations, execution? What's the concern?
Yeah, so caution is more very near term, to be honest. Nothing to do with any structural issue with the team. So I'll give you a bit of a number. For example, BEL we are invested in, HAL we are invested in, Solar Industries, which is quasi-chemical and quasi-defense we are we are invested in Zen Technology. These are the 4 names we hold in the portfolio. Now, if you look at BEL since, let's say, FY 20 to 23, if you see the top line growth is around 12%, EBITDA is around 15%, and PAT growth has been about 18%. The stock trades at about 50, 55 times currently. Point I'm trying to make is if you want to sustain 50, 60 times, the growth in earnings has to be not just order book, has to get reflected in the numbers quarter on quarter. In this business, it's very difficult to do that. So BEL, for example, does radars, it does anti-submarine systems, it does a lot of electronic parts for defense and aerospace.
I think we just lost that feed, but okay. I mean, some of those stocks doing well. 2 questions to you, Kunal. Any of these PSU names that have been buzzing today, do you like any of them on the charts?
Yeah, I think, yes, if you talk about the defense space, BEL is something which still looks attractive at these levels. So for me, if you get around a corrective phase, somewhere around 264, 265, that would be a good level of entry again. So wait for some dips into the stock. Again, I can expect the stock to go towards the levels of 300 on the upside. On the shipping space, GRSE still looks very attractive to me. I think the momentum has been very strong in the stock. Again, over here, since the rally has been quite sharp, if you get a 3 to 4% decline in the stock towards that mark of 1150 or 1140, utilize that to buy. I can expect again targets of 1230, 1250 on the upside in the very short.
Kunal, one more question. Is Engineers India, which is just starting to move above the 270 mark, is it showing any promise on the charts?
See, I think on the charts, if you look at it, is trading at a very critical resistance zone. So it's a rounding base formation on technicals, what it has formed. And the previous resistance was at 275 to 80 mark, and it is exactly going towards that mark. So if that resistance is taken out decisively with volumes, then you can expect the stock to move higher towards 320, 330 levels. The setup is very good, but I think we need to wait for a confirmation because there are times in the previous where we have seen a breakout failure even at the current levels as well. So I think wait for the stock to close about 280. That will confirm the breakout. Then you can look for targets of 320 on the upside.
Okay, Kunal, that time we're probably 8 minutes from close, but that time on the show where we take from you your BTST, STBT ideas, if any.
Yeah, I think overall, if you look at it, it's the day for the PSUs, and I expect this momentum to continue. So LIC is something which is looking very good on the chart. The stock has given a fresh breakout with volumes in today's trading session. Surpass its hurdle of 1020 on the lower end. So now the breakout is confirmed on the stock. I expect this momentum to continue and take the stock towards 1060, 1080 levels on the upside. So LIC is a buy at the current levels, keeping a stop loss of 1000 on the downside.
Gurmeet, a lot of people are very conducive on buying into insurance, whether medical insurance or life insurance. But Star Health, LIC as well come into the conversations. Have you guys thought of adding into insurance in the recent past? I mean, that rising per capita benefiting insurance always comes into play.
So Niraj, we have ICICI Lombard. We don't have any life insurance stock. ICICI Lombard, again, the auto portfolio doing well, health portfolio, they were always doing well, and they were very prudent with the agri portfolio. And I think that's where now the overall total ratio, which we call, keeps improving. My sense is they should be maybe at 101. Technically, which means that your underwriting profits should be good enough below 100, and you're not just dependent on investment profits. What we are happy to hold now more for long term has been the capital marketplace, and that's where we've made decent money, whether it is CDSL, whether it is CAMS, whether it is some of the AMCs like SDFC, and even some of the exchanges. I think to me that's a more structural long-term play. It's actually a tech play. Like a depository, you make money on transactions, you make money on KYC, you have annuity. So it's a very, very, in a very jokingly we call it as a toll naka stock. You just pay money for whatever action you do on the stock market. I think that we are happy holding, and we still have only 9 crore unique investors, Niraj, and we have 55 crore pan-link Aadhaar. So I think the runway is probably huge.
Well, runway huge, and no surprise there, Gurmeet, talking about it. Gurmeet, before we leave, not on your PMS, of course, I don't know if you can't talk about that, but anything that you guys have recently, if you may have recently added, just want to know the perspective. They're not a buy or a sell recommendation.
So one area we like either is this waste management. I think our metros are becoming filthier, especially the top cities. And government has come up with a regulation on recycled plastics. So you got to use 30% recycled content for PET bottles. You have to again use 30% for the drums. It's called MDP for the drums, the big drums and plastics you make. And then there is a fine starting next year, which starts from 5 rupees kg and keeps escalating to about 20 rupees a kg within 12 months. And this has suddenly led to a spurge in demand for recycled plastics. One of the sub-demand is of rPET, which is recycled PET, which let's say a Coke, Varun Beverage, a Dabur, and everybody uses for PET bottles as well as ready-to-eat food packaging. The demand now post this regulation will be 4 lakh tons. The current capacity of the industry is less than 3 lakh tons. So this will drive not only margins for companies who are into waste management, but also big volume growth. So we have just added Ganesha Ecosphere in this space, 40-year-old company, Kanpur based, and it's a tough space to be in. It's very difficult to get into waste management with the kind of network you need right at the grassroots level, in terms of picking up waste and then, bringing it to the factory to get it recycled. So that's something we have recently added in the portfolio. I think we are looking at more ideas now. I think this is a genuine ESG theme, which we think has, very long legs.
Right. Gurmeet, while Nifty Realty is doing nothing much, but the realty space in general has done extremely well for investors. You believe that there is still some value on the table left with regard to real estate stocks, given that structurally debt levels have come off quite sharply. They are, of course, in an upcycle when it comes to rates as well. Probably rates ought to go down going forward, and that should aid these realty stocks. How do you look at valuations given the kind of returns they've given and some of these factors? If you can just try and give us perspective.
200%, very, very constructive on real estate. And I did mention one of these interactions that our largest real estate company is just 2 lakh market crore, which is DLF. And the other are almost 1 lakh crore, which is Godrej or Oberoi's. And a lot of these real estate companies are now learning the annuity model. They're trying to also build a commercial portfolio which gives them nice rental yields and office portfolios so that the cash flows are more regular and not just development based. So there's a bit of change in business model as well. And what happened in COVID is that initially, we had no inventory. So first the unsold inventory got sold out, and now the new inventory is coming in. So what will also happen now, the first 2 years, you have a civil work. So the demand essentially is cement and cables, wires and electrifications. Once the civil work is done, the home improvement demand also comes back. You would have seen almost a year, it's been very flattish for tile makers, sanitary makers, all decor and decorative, building materials. It will come back because the new inventory is come in, a lot of will get constructed, and then the demand post-civil will come back. So you will start with reality right now, and might be a good idea to get into the tile and sanitary makers and, the other home improvement guys, the plywood, etc. maybe a quarter from now, because a lot of the civil work would be ready, further fueling the demand for home improvement. Paints are not as much because paints 70% is, repainting. But other building material will also start coming back. So we are adding both. We are looking at developers and we are looking at building materials.
Gentlemen, out of time completely. But Kunal and Gurmeet, great talking to you. Thank you so much for your time this afternoon. And have a great remainder of the week. Quickly wrap up the markets. And I'll just stick to the heat map before Harsh comes in, and we'll wrap up the markets quickly. But 42 seconds left. Even Stevens, not bad going. Autos and Nestle principal culprits, but and ICICI Bank too, by the way, putting that little bit of pressure along with HDFC Bank. But metals have done really well, just some chipping off at the close, maybe some bit of intraday profit booking. The Adani twins have held out, especially Adani Ports up 3%. There is SBI which is doing well. Harsh, that explains the mood, really. It's the two private banking names and autos which have put that pressure.
Well, yes, broader markets also seem to be of a similar texture. The PSU names, something like a Power Grid, was also up 2.5% odd. And that seems to be the theme. We've closed for the day, of course, but 0.5% lower on the Nifty small cap. We can pull up the Nifty mid cap as well. We've settled in the green where the Nifty mid cap is concerned, but let's just quickly take a check on where it is. 1/3% higher, so no complaints there. Let's quickly pull up the sectoral indices. Metals, as Niraj said, as well as PSU were the pick of the sectors, at least in trade today. We've spoken about metals. Let's pull up the PSU pack, see what's happened there, zoom in. And largely what you'll see outside of GAIL and Concor, we've seen some very strong moves. Look at an LIC, look at a Coal India, BHEL doing very well, BEL of course, and NHPC also doing fairly well. Power Grid at the bottom of that pack, but nonetheless 2.5% higher on that one as well. So very strong moves here along with metals. Some select names, let's try and pull up something like a PB Fintech, see where that one's closed in at, because it started the day not so bad, Niraj, but it slipped steadily through the day and now it's closed roughly 5% lower. But outside of this, several other names in focus.
I just thought the BSE 500 losers and gainers.
Yeah, let's pull that up actually.
Before we wrap up the show.
Yes.
And that gives you the story, Harsh. Hinging up 20%, Harsh.
Yeah, we've closed. Yes, that one's closed 20% higher. So yeah, it's done fairly well. But look at the delivery at the other end of the spectrum. Triveni Turbines as well lower. Trident 5.5% lower. Again, weak numbers there.
Aptus, there's a block deal that's happened.
Aptus, there's a block, and PB Fintech, you had a % stake sold by Yashish Dahiya, who's the MD CEO. Outside of that, RVNL's done very, very well. 13.5% higher. And some of the defense names, we spoke about all of those on our show, Niraj, but Cochin Ship as well as GRSE, some of those names have done very, very well in trade, along with BEL.
Well, good going then. But on that note, it's a wrap on this leg from Harsh and me and the team that put this show together. Thanks so much for watching.